Good afternoon, everybody. So when we started in week one, we started with double entry booking system, debit and credit. We record the business transactions, and after that, we balance of the accounts and prepare trial balance. That's including week one, week two, week three, and week four we started introducing the financial statements. So including the including the three statements: statement of profit or loss, statement of change in equity, and statement of financial position. So this week we will summarize all the weeks in one question, which is prepare the financial statements, the three financial statements. So this week or this lecture will summarize all the weeks in one question. This is very important question. You should understand it in order to succeed in this module, and also in order to understand the financial statements. So let's go and do it. So if you look at the lecture lecture slides, it's basically it's all about the question Orange PLC. Okay, it's a long question. I do appreciate it's a long question. It will take some time from you. The only way to practice. This is the only way in order to get it right. So now if you look here at the question, the first thing, to make your life easier, what you need to do, we have three statements: statement of profit or loss, statement of profit or loss which measures the profitability of the business. So don't forget that statement of profit or loss includes sales revenues minus cost of sales equal gross profit minus all expenses, distribution and administration expenses equal operating profit, and operating profit minus the interest payable, and also minus the tax payable. That gives us the net profit or profit for the year. So remember this is very important. So cost of sales, remember that cost of sales has equation, and the cost of sales equation is opening inventory plus purchases minus closing inventory. Okay, so anything to do with this should be under statement profit or loss. Now when it comes to a statement of change in equity, it's all things to do with equity. Don't forget that equity is part of statement of financial position. Yeah, so the equity section should be included in statement of change in equity. So statement of change in equity, which includes the share capital, share premium, and retained earnings. Of course, statement of financial position, which is the last statement, it's based on the accounting equation. The accounting equation is assets minus liabilities equal equity. So don't forget that assets includes non-current assets and current assets, and liabilities include the current liabilities and non-current liabilities, and equity, which includes the share capital, share premium, and retained earnings. So it is really pointless that you're listening to the lecture and you haven't done the previous lectures. You will not understand anything. So you should go to the previous lectures, understand them before come and do this lecture. So in order to make your life easier, what you need to do, every other question, every single item, so I want you to write beside it which statement you're going to record it, and also where about in the statement. Right, let's have a start with this question. Okay, here we go. Right, okie dokie. So now with this question, as you see, Orange PLC, this is a trial balance of Orange PLC. Yeah, this is trial balance. And from this trial balance also here, as you see, there is additional information. This is notes which we need take into consideration. Okay. And of course, the question asks you to calculate the 3 financial statements, including, as I mentioned, profit or loss, change in equity, and financial position. Let's start with car. So car at cost. So of course, straight away, you write beside it, car at cost is what? Is fixed assets or non-current assets. Non-current assets. So you can write beside it, first of all, statement of financial position, statement of financial position, and it's non-current assets. You write it under non-current assets. Accumulated depreciation on the car brought forward, this means beginning of the year. The previous accumulated depreciation, if you remember when we explained depreciation, we did say that depreciation, the depreciation for all the last years, previous years, we call them accumulated depreciation, and this is the accumulated depreciation for the car. So don't forget, this should be taken away from the cost of the car. So when it comes to calculate the car and do the workings for them. Same applies with furniture and accumulated depreciation on furniture. Same, it should be statement of financial position. And also you need to remember that should be also under the non-current assets. Why is non-current assets? Because it is a fixed asset for the business, for the business use. So remember, also we have accumulated depreciation on furniture, so remember that you need to take it away. But again, there is a way how you do it. We will do it in working 3. I'll show you how to do it in working 3. So at the moment, but you need to understand that it should be recorded in statement of financial position under non-current assets. Trade receivables, trade payables. So trade receivables, of course, goes to the debit side here, because this is debit, this is a credit, yeah? This is debit and this is credit, yeah? So trade receivables should be going to the debit side, 20,000, and a trade payable should be going to the credit side of 5,000. So remember that trade receivables is current assets. So statement of financial position, both of them in statement of financial position, but trade receivables current assets, and a trade payable it's current liability. So trade receivables you recorded under current assets, and of course a trade payable should be recorded under current liabilities. In terms of expenses, general expenses, we did say that all expenses should be recorded under statement of profit or loss under the expenses section. So any type of expenses, statement of profit or loss under the expenses, any part should be there. So of course we need to do workings for expenses. So far we have general expenses, we have also wages. Wages is also expenses, statement of profit or loss. We also have rent. Rent is also statement of profit or loss, also expenses, also expenses. Okay. All right. So as you see, guys, these are the expenses. We need to list them under working 2. We need to list them under working 2 to calculate the expenses there. Right. Next one, we have inventory at 1st of October 19. So remember the business, the end of financial year for the business ends on 30th of September 2020. This means that if you go back 1 year, so the company starts, or the financial year starts on 1st of October 2019. So what does that mean? This means that this is opening inventory, right? If opening inventory, if you remember opening inventory, we need opening inventory in order to calculate cost of sales. And cost of sales, if you remember, cost of sales should be under statement of profit and loss, and this is why we do working one on it. This is why we do working one on it, if you remember, cost of sales. So expenses, as we said, we do working two for it. So working two, where is also expenses here, we have working two, also expenses here, we have working two here, all the expenses. For the first four, including the non-current asset, we see we do working three for it. Working three, that's including all in working three. That's also including in working three, and that's also including in working three. There is no working for trade receivables and payables because it's straight away, you just put it in the statement straight away. For expenses, we said working to inventory. Cash and cash equivalents, again guys, for cash and cash equivalents, straight away, it depends. Here, cash and cash equivalents, as you see, it's on the debit side. It's recorded on the debit side. This means it's money in, isn't it? It's money in. So it should be recorded under current assets and statement of financial position, statement of financial position under current assets. So we need to do workings for cash. Why we need to do workings for cash? Because here, because of the dividends, because of the shares, because we issued shares, the company issued shares. If the company issued shares, so this means the cash goes up. So this one need to do small working for cash, and that's also should be in working. We put it in working 6. Where is cash? Here we go. Working 6. Yeah. Retained earnings at 1st of October 2019. So for retained earnings, 1st of October 2019, so there's opening retained earnings, and retained earnings should be included in the equity, should be included on the equity. So when I say equity, this means statement of change in equity. Statement, anything to do with equity should be recorded in the statement of change in equity. Okay. In terms of purchases, if you remember, we need the purchases to calculate cost of sales, because the formula said opening inventory plus purchases minus closing inventory. So purchases should be included to calculate cost of sales, and of course cost of sales is part of statement of profit or loss. And if you remember, we needed for working one, isn't it? Working one. Okay. Right. In terms of sales revenue, right? Sales revenue. This is the first item. You put it under statement profit or loss. Statement profit or loss. This is the first item. You put it under statement profit or loss. Share capital. Ordinary share means share capital, and when there is something called here beside it 50 pence, 0.5 each, this means this 50 pence. What does that mean, 50 pence? 50 pence is called the nominal value of the share. So each share the cost the business 50 pence, right? So this is nominal value. Okay. So anyway, any share capital or share premium or retained earnings, that should all be included in equity and statement of change in equity. So remember guys, again I'm repeating myself, ordinary shares mean share capital, and the 50 pence here, which is 0.5, it is the nominal value of the share. So each share costs the business 50 pence. Okay, right. Long-term borrowings. When it comes to long-term borrowings, we talk about non-current liability. So that's a statement of financial position, non-current liability. Under non-current liability, because it is more than 1 year. It is more than 1 year. Okay, right. Now let's come and carry on with the additional notes. The directors estimate the corporation tax to be £1,000. So remember guys, to do with tax, you need to put it in 2 places. The first place is the statement of profit or loss at the end. If you remember, did you remember when you do operating profit, and after you do operating profit, you deduct the tax payable. So you write it down under statement of profit or loss at the end, at the bottom, and also should be included under statement of financial position, under current liability, because obligation on the business to pay to HMRC, the tax authorities. In terms of inventory at 30th of September 2020 was valued at £15,000. So of course this is closing inventory. For a closing inventory, we need it for twice. We need to use it twice. The first one, we need it for cost of sales. Remember, because the formula for cost of sales is opening inventory plus purchases minus a closing inventory. And the second thing, we needed the closing inventory under current assets. In a statement of financial position. Under current assets in a statement of financial position. Now let's come to depreciation. In terms of depreciation, right, here the question tells you that depreciation is to be provided on 10% reducing balance. So if you remember that for depreciation we have 2 methods. The first one called straight line method, and the second one called reducing balance method. So here in the question, if you remember that we've got 2 non-current assets in the question. The first one is the car and the second one is the furniture, and these we should calculate depreciation on them for this year. So in this case, the question tells you that you depreciate the car, yeah, can you see, based on what? Based on 10% reducing balance method. Based on 10% reducing balance method. That's for the car. So the car, 10% reducing balance. For the furniture, it's based on straight line, and 10% on the cost. 10% of the cost. So basically, you just multiply 10% of the cost. So I do remember that you will ask me, okay, but the equation is cost minus residual value divided by useful life. It's the same, but here it's through percentage. Yeah. So this depreciation we needed. It's very important. We needed, and that should all be included in working 3. Including the non-current assets, if you remember there. Yeah, that's great. So this one, there is a 10,000 shares were issued on 1st of February 2020 at a price of £1 per share. This transaction has been recorded, so we need to record it in this case. So when it comes to this, the company issued shares. the company issued shares to the public. What does that mean? This means that everybody can buy these shares, right? So they issued at £1 per share. At what? At £1 per share. So this £1 per share, guys, this is the market value. This is the market value. This is the market value. So what does that mean? What's the difference between the market value, £1, and the nominal value? So the market value is how much we pay to buy the shares right now. Right now is the market value right now. So if you look online, you will see the market value of any company if you want to find out, including Tesla, Apple, etc. So the nominal value is the amount or the share, the value of the share when the company was formed. When the company was formed. So the difference between the market value £1 and the nominal value 50 pence, it's the premium value, is the premium value 50 pence. So this, the 10,000 shares, that should included under the equity, under the equity section, and also we need to do working for it, for working for in order to find out how much money we received from issuing these shares in terms of share capital and also in terms of share premium. So now the last additional information here, you see that the directors proposed and agreed a dividend of 10 pence per share, which will be paid out after the year end to all shareholders registered at 30th of September 2020 in the financial year. Remember, guys, when I explained the lecture, I explained that dividend payable. Dividend payable is a concept. It's is the company when they calculated the profit, so after deducting the tax, so they keep some profit as a retained profit, and also from this profit they distribute dividends to shareholders. Dividend is a liability to the business, because the business has obligations, liability to pay the dividends to the shareholders. So as you see, dividends, we need to calculate, of course, dividends should be included under the liability, current liability, but also is part of the equity, because we need to take it away from the retained earnings. You will see it. So here we go. We say that equity, right? And it is in working 6, not working 5, and also should be under current liability. Also should be under current liabilities. Excellent. Right. So as you see, guys, this is analysis of the question. It's very important to analyze the question, because always I'll tell you students, this is 50% of the solution, right? Remember this. So once you've done this scenario, you analyze it and you put it down under workings, etc. What you need to do, first of all, before you start preparing the 3 statements, my advice to you, before you start preparing the 3 statements, get the workings done. That's my advice. Get the workings done. Do not jump straight away into the statements. Finish all workings. Once you finish all workings, then here we go, you do the statements. So once you finish the workings, that's 80% of the solution. That's it. And the marks on the workings is more than the statement itself, right? The first working we will start with it, guys, is the cost of sales. The first working we will start with is the cost of sales. The cost of sales. So cost of sales. Then The second working, the distribution and administration expenses. The third working is the non-current assets, includes the depreciation. The fourth working is the new share issued, and the fifth one is the dividends, and number 6 is the cash, isn't it? Yeah, number 6 is the cash. Right, so these are the 6 workings. We need to do them, and once you finish all the workings, can you see, once you finish all the workings, you jump straight away to the statement and do the statement, because the statements will be ready for you, isn't it? Will be easier for you once really you know the working. Straight away you jump to the statement and it should be fine. Okay, so the first working we'll start is cost of sales. So remember the formula for cost of sales: the opening inventory plus purchases minus closing inventory. Opening inventory, you just take the figure from the question. The opening inventory is here, 30,000, plus purchases. Where is the purchases? Here we go. That's purchase of inventory. Here we go, 50,000, minus a closing inventory, which you remember this one, the 15,000. So if you apply it on this question, you should be able to find that the cost of sales equal 15. This is constant. The cost of sales equal 65,000. Equal 65,000 pounds. 65,000 pounds. So this is cost of sales, and remember that cost of sales should be going where, guys? Should be going to statement of profit or loss. Statement of profit or loss. The second workings, it's the distribution and administration expenses. This is the table which you need to do, right? This is the table which you need to do. So expenses, trial balance, other, total. Okay. Now, when it comes to expenses, when we analyze the question, if you remember, where is the question? We introduced or identified 3 types of expenses, if you remember. This one, and this one, and also this one. Yeah. For this one, you copy paste the numbers and you put it in the trial balance here. General expenses, wages, salaries, you put it here, and the total here. Easy. Now the question is the depreciation. So remember that depreciation is an expense, is it? Depreciation is an expense to the business, isn't it? So we need to calculate, right? So we need to calculate depreciation. We need to calculate depreciation and find out. So, and we need to list it under the others. But how can we calculate depreciation? So you cannot complete this working unless you calculate depreciation. So in this case, in order to calculate depreciation, what you need to do, you need to do working 3. You need to do working 3. So in this case, we'll jump to working 3 and then go back to working 2 to complete it, right? When it comes to working 3, as you see, this is the layout of this working, and this is the layout which you need to use all the time. Don't forget that it depends how many non-current assets in the question, you list them. So here we have 2 non-current assets, so we list them, which is car and furniture. Easy. These are fixed. These are fixed. So all the time you write depreciation rate, cost, accumulated depreciation brought forward, mean beginning of the year, depreciation for the year, accumulated depreciation end of the year, CF mean end of the year carried forward, and we have the NBV, which is the net book value. Okay, this is one of the complicated workings, and also the most, which has a lot of marks on it. So we agreed that we need to list the non-current assets, which is the first one on the car. So first of all, depreciation rate. If you go to the notes, you will see that the car is what is being depreciated using reducing balance method. True? Reducing balance method, 10% reducing balance method. So in this case, you're right, just reducing balance method, easy, RB, easy. What is the cost of the car? 50,000, is it? Yeah, where is the car? Here we go, 50,000. So the cost of the car is 50,000. The accumulated depreciation on the car brought forward at beginning of this year is 5,000. It's 5,000, right? So 50,000 and accumulated depreciation brought forward for this year is 5,000. So it's fine, we agree with this. There's no issues here. Now this is here, now it comes to the calculation, the workings here. So how can you calculate depreciation? How can you calculate depreciation on the car using straight reducing balance method? Right, look, reducing balance method, the formula you need to follow in order to calculate depreciation using reducing balance method is that, let me write it down, cost minus accumulated depreciation brought forward multiply the reducing balance rate. Here we go. Right, look, let's do it together. So that's 50,000, the cost, which doesn't need calculator really. So 50,000 pound minus 5,000 pound, the accumulated depreciation, equal 45,000. So 45,000 times 10% equal 4,500 pound, equal 4,500 pound. So here we go, and that's 4,500 pound. This is the depreciation for this year. Now accumulated depreciation carried forward equal accumulated depreciation carried forward equal the accumulated depreciation brought forward beginning of the year plus the depreciation for this year, plus the depreciation for this year. That comes to as accumulated depreciation carried forward, which means this is the accumulated depreciation on end of this year. Okay, 9,500. 9,500. Right. Now the net book value, the NBV equal the cost minus accumulated depreciation carried forward. Right? So the accumulated okay, what is it? Yeah, accumulated depreciation carried forward equal accumulated depreciation brought forward plus depreciation for the year. Net book value equal cost minus accumulated depreciation carried forward. Sorry guys for the capital letters and small letters. So here we go. So cost minus accumulated depreciation carried forward. 50,000 minus 9,500 gives us 40,500. 40,500 pound. Amazing. Great. So this is for the car. For the furniture, the depreciation rate is 10%, but look here guys, look. 10% what? Straight line. 10% what? Straight line. Can you see? So on the furniture is a straight line. What? Straight line depreciation 10%, all of the cost. In this case, here we go. We write here 10% as I mean straight line. So furniture, the cost, if you go to the question, so you see the cost of the furniture. Here we go. What's the cost of the furniture? 30, and accumulated depreciation for the furniture 5. Easy. In this case, here we go. 30,000, this is the cost of the furniture, and the accumulated depreciation brought forward is 5,000. Now here we go. Now how we can calculate depreciation using straight line? I know in the way you know it, using straight line is cost minus residual value divided by useful life. This is the way we do it, isn't it? This is the way we do it. So the cost is 30,000 minus residual value. There's no residual value. Divided by useful life. The useful life is 1 year. We calculated only for 1 year. Okay. There is nothing there can help. In this case, when it comes to the question like this in financial statements, when it tells you to calculate depreciation using straight line, you simply you need the percentage and calculate it of the cost, which is 30,000 pounds. So 30,000 pound multiplied 10% equal 3,000 pound, and this is the depreciation on the furniture. Here we go. So in this case, in order to calculate the carried forward accumulated depreciation, we did say that you add these together, right? And in order to calculate the net book value is the cost minus the accumulated depreciation equal 22,000. So this is the way how we do it. So don't forget the total. So the total at the end 62,500. 62,500. This is the total non-current assets, or the net book value under property, plant and equipment under non-current assets, and should be recorded in statement of financial position under non-current assets. 62,500 should be under non-current assets. If you remember here, if you go to the statement of financial position, you will see it 62,500. So that should be recorded under non-current assets in a statement of financial position under property, plant and equipment, and we write beside W3. Now working 3 done, but if you remember, we haven't completed working 2, right? We haven't completed working 2, right? So in working 2, what's missing here? The depreciation charge, depreciation expenses. So as you see, the depreciation expenses is, if you add them together, that's 7,500. So 7,500, you write it here. In this case, you write and complete the workings, and the total expenses should be 27,500 pounds. And don't forget that total expenses should be included under the statement of profit and loss under the expenses. So if you go to the statement of profit and loss, you will look that the revenue here minus the cost of sales, which we did it in W1 if you remember, and this is the distribution expenses. That's we did it in working 2. We did it in working 2 here. 27 27,000 and 27,500 pounds. So far the cost of sales working, distribution expenses working, and the third working is the non-current assets, includes the depreciation. I hope so far it's clear straight away, and if it's okay, the fourth working you need to do it is the working for, which is the new share capital.